Hello traders and Market Club members everywhere. Adam Hewson here, coming to you from the digital studios of Market Club. We're going to be looking at the three major indices: crude oil, the euro, and we're going to delve into gold and why you should be watching gold. It could be a very interesting pattern that's developing in that particular commodity. So let's get started right away. So here we are. We're looking at the S&P 500. This is the cash market. And as you can see, clearly it's broken out of a pattern that we like. It's a sort of a box type pattern, and I'll just reiterate that. So just kind of like here, you can see how it's broken out of this pattern. And it looks to me that we could see this quite easily go up to the 2200 level. I'll show you why. So here's the breakout right here. And if you measure from the lows that we've seen here, let's call this 2000 right here. And let's call this 2100, which is where kind of like the intersecting line came here. So 2100, 2000, take away 100, takes you up to 2200 on the upside for the S&P 500. So that's what we're looking for in this particular index. So let's move on. Pretty much a similar pattern in the Dow. You've got the box we talked about before. It's sort of broken out. You can just very clearly draw that right here. It's a little bit more jagged, but you've broken out 17.2 to let's call it 18.2. That's 1,000 points. 19.2 would be definitely a target point. You've also got all of your trade triangles positive, and you're well over the 50 line on the RSI. So let's call a move in this index up to 19,000. That's the target zone for the Dow Jones right here. Now this is the Nasdaq, and you can see the Nasdaq has already moved quite a bit, so it's also very overbought. It is a strong trend, and if we put our box in this situation, you can see just right along here to down here. So you're going from 4,800, I would say, to 45.5. So that's 250 points from here. So that would be a 5,050. We're not quite there yet. So that would be our target zone. Let's just round it out to 5,000, and I think that would be a better idea. So 5,000, I would imagine it's going to be very hard for the Nasdaq not to go up if you've got the S&P and the Dow moving higher. So that's our target zone right here for the Nasdaq. So let's move on. Now this is the euro, and as you can see, the euro just continues to sink. It's had a period of time, actually, for most of February and maybe the last week or so in January, we sort of gone sideways. But notice, the thing I'm noticing here more than anything else is that, one, all of our trade triangles, you can see them right here, are all down. You're below the 50 line right here, which is a negative sign, and you sort of come down and you just sort of slowly turning around to resume the downtrend. I'd watch where the parabolic is, because all of our trade triangles are red, which means the trend continues to be down. It's just taking a minor break, but this is where resistance is, at the 50 line in the RSI. So trend clearly is down in this particular market. Now this is the gold market, and I want to show you a couple of things here in the gold market, and that is, if we take a trend line and just draw it from the highs, you can see how it matches quite magically these previous closes, and 1220 is a key area for gold. If it closes over 1220, that also intersects very nicely with a parabolic, and I would say if we get to 1220, you're probably going to see the RSI go over 50, which is something we want to see. But the other thing that's interesting too, if you take the entire move from the highs to the lows, and I'm just going to take the trend line off, but I want to measure from the highs to the lows right here, to the very low of the move. And you can see we're right on the 61.8% Fibonacci retracement, the 61.8% Fibonacci retracement. So here are the things. You've got a trend line to watch very carefully. That's one thing. You also have a Fibonacci retracement, which should hold. And you want to watch the RSI. Plus, you want to watch our trade triangles, because if this red weekly trade triangle turns green, you want to get in the gold market on the long side. That's definitely what we want to look at. So again, we've flattened down on the 200-day moving average. We've got a lot of things beginning to gel. It's not out of the woods yet, so just don't jump in front of this thing. You want to see some indication that it has turned, and the parabolic would be the first one, then also, of course, the trend line, and also the RSI. So watch those three elements very closely. Now this is crude oil. Like, crude oil has basically, I'm going to go back into a candlestick mode, but crude oil has really been in a flat kind of market. You just you can see how it's just sort of drifted around between 55 and 45. That's really where it is right now. And if you look at our tools that we use, you can see we're sort of in a trending range type scenario with the weekly that's up and the daily's down, so it's kind of a mixed bag. It's best probably at this point in time to be out of this market, but I would be watching this level here, the 50 level on the RSI. If it goes over there and we see some more strength and the daily turns green, I would say that would be a good sign that we've maybe made a turn back up and have another challenge of the 55 level. But that's how I see things right now in the markets. And thank you for stopping by. Appreciate that. And if you want to make a comment, please do. Tomorrow we're going to be talking about some interesting stocks that we see and how you can make some really interesting ways to make some money tomorrow. So tune in for that special video. Every success trading today.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.